Anyone knows that information is the most valuable form of currency. So in this video, we're going to discuss, well, how to leverage that information to make, well, currency, aka moolah, aka money, so on and so forth. So if you're familiar with the term accredited investor, an accredited investor is pretty much an individual that has liquidity of about $250,000. If you're a couple, you have liquidity of about $400,000, meaning you have assets, money, capital, so on and so forth, cash that you are able to invest either into the stock market or make strategic investments with. Now, with ChatGPT and AI and everything else, you can do this a lot easier without the use of, well, a stockbroker or the assistance of some type of advisor to do market research for you. With platforms like E-Trade, Robinhood, so on and so forth, you can utilize the ChatGPT finance and economic feature within the GPT section. So the GPT at the top left, there are little lines. You click on that, you go to Explore GPTs and type in finance and economics, and it should be right in there. Next, what you want to do is you want to understand what you're going to invest in. Well, since the media normally dictates if we are in a bullish or bearish market, meaning the market is on an upward swing or a downward swing, so on and so forth. Why? Because a bull normally attacks with its horns from the bottom up, and then when a bear attacks with its claws, it swings from the top down, so on and so forth, hence the term bullish and bearish market. Now, for those of you who do not know me, my name is Michael. I'm former military, and while you're in the military, you get to take a lot of classes, especially classes for free. So I took a lot of investment classes, things on finance and everything like that, because eventually one day I wanted to be a hedge fund manager or someone that can solve business problems. And one of the problems most businesses have is, well, money and generating profits. So how do you diversify your portfolio? Well, I remember my instructor came in one day. There was about 20, 30 of us in the class, and he held up his iPhone, right? So on and so forth, or, a utensil or whatever. And he goes, how would you invest in this company, right? And he holds up his iPhone, and people would say, oh, well, I would invest in Apple, so on and so forth, right? And Apple does enough advertising where you don't have to really do anything because they do all the work for you. You just have to watch your funds. But then he said something interesting. He said, Apple does not make the glass that goes on to the phone itself. Another company handles that. Apple does not make certain parts of the phone that get put into it, so on and so forth. So if you want to invest fully into Apple, look at all the businesses that Apple does business with and invest with those companies as well as Apple. And then your diversified portfolio will grow exponentially because Apple is pushing a product, but it has to use the glass from this company. It uses the chips from this company. It uses certain features from this company. It uses certain wires or metals from this company when it does its soldering and everything like that. And it buys its cases from this company. Now you have multiple companies to diversify your assets amongst. And when Apple comes out with a new product, whether that is an iPhone, a laptop, a tablet, so on and so forth, all those companies are making money, hence the term, when one eats, everyone eats. Now, let's go a little bit further now, right? For you guys that want to do good in the world, that have capital, but, well, but so much about finance and investments. Well, when it comes to what's happening currently in the news, well, they're talking about war. Okay, that's great. You want to have peace and stop war? Take your capital and invest it in the military-industrial complex. Why? Because since the United States is giving weaponry and everything else to other countries, they have to resupply. What happens when they resupply? The military-industrial complex gains, well, income, right? Revenue, right? They get paid in order to build new ammunitions or explosives or planes or tanks or whatever technology for the military purposes. Now, if you know the companies that the government actually does business with, and they're a publicly traded firm, so on and so forth, or business, you can then invest in those companies, as well as taking the strategy from what I mentioned earlier with Apple and the phone, and realize that the components all come from different locations, and then they assemble as well as construct everything and manufacture it in one location, bringing everything together. Because this has a higher dollar sign to it, you may need more capital, so on and so forth, right? But think about it. If they keep pushing the news and you hear, oh, well, we just sent weapons to this place and China's doing this and this is doing that, etc. Well, why don't you research with ChatGPT, right? And have it connect to the internet or Google Gemini and have it research all the companies that these military industrial complex companies do business with that build weaponry, ammunitions, explosives, tanks, jets, so on and so forth. I mean, Boeing just doesn't make airplanes for civilian purposes. They do it for military purposes as well. Where do they get their metal from? Where do they build their turbines out of? Where do they get those parts? Where do they get the fuel to create jet fuel, so on and so forth? And if they're pushing that out, well, and if you're invested, you're going to make a lot of money. Now, let's say you aren't an accredited investor and, well, you haven't read the book Rich Dad, Poor Dad, you haven't read any of Robert Kiyosaki's books, you haven't read Benjamin Graham, The Intelligent Investor, you're new to finance. Well, first things first, you need to learn the terminology within the financial industry in order to understand what's being said and how to trade, right? Then you want to start off very basic with just stocks. Options are a little bit different, but you can make earth-shattering amounts of money when you understand them. Now, sticking with stocks by itself, it's very simple, right? You purchase a stock, it goes up, you make money. You purchase a stock, it goes down, you lose money. Then there are puts and calls, so on and so forth, etc. Or you can bet against the stock, meaning you're going to say that the stock is going to go down, and when it does go down, you make money. When you call it and it goes up, you make more money, so on and so forth. This term would come from the option side, right? Because you could buy calls, you could buy puts, and then there's strategies like a covered call, which is what Mark Cuban utilized when he made his fortune. Then you have other strategies like a condor spread, right? Or a condor, or a reverse condor, or whatever the case may be. And it looks like a graph in geometry when you look at these different strategies, but they do work. Now, if you're getting into it and you're just getting started and you don't have a lot of money, I would suggest that you put at least $100 a month aside into, let's say, a Robinhood account or an E-Trade account. Now, $100 a month may sound like a lot of money. However, it's not in comparison to what people spend at Starbucks, right? So if you spend $5 a day over the span of about 30 days, that's about $1.50, right? So for less than $5 a day, you can start contributing towards an investment portfolio, right? In other words, securing your financial future, right? Skip out on the cup of coffee in the morning that costs $5 or $6, $7, $8, $9, $10, so on and so forth. Eat out once a week instead of 2-3 times a week. Put that into a investment account, and now you'll build up and accrue funds over time. If you have more money, then go ahead and do so if you have the ability to do so. But I'd say start off with $100. Now from there, you're going to utilize ChatGPT's finance and economics feature, and you're going to ask it to research stocks that are at a $5 to $10 price point, not so much a penny stock, but just enough so that it qualifies as a stock. So $5 to $10, maybe 15 if you're being, a little bit loose with it, or if you want to push it, $20 per share, so on and so forth. But eventually you want to build up. So what you want to start off with is $5 to $10, roughly in that range at a certain price point. Then look at which companies are doing at least 200% increase in the last 3 to 5 years. Why do you want to look at historical data during your analysis process? Well, when you're looking at historical data during your analysis process, you can see the trends and the patterns. See, pattern recognition is something that, well, financial analysts look at, because if it's trending on the news, maybe you'll get a short burst where you can make an increase in profit, so on and so forth, or vice versa. Now, if they have been doing great over the last 3 to 5 years and they have accumulated an increase of about 200 to 300% during that time period, then that is probably a good stock to invest in. Now, I am not a financial advisor nor a certified financial planner. I am just someone who has taken way too many classes, studied way too much, and if I had the time and the ability and the money to go ahead and go through the whole process, because if you've ever seen how much it costs to take a Series 7 or your Series 6, Series 6, 63, and 60, Series 7, so on and so forth. And then, of course, there's Six Sigma, green belt, black belt, and all these other things, ways to mitigate risk on top of other things so that you can trade and, well, handle people's financials, right? Or i.e. securities, right? Or deal with securities. So if you're in the insurance space, you probably have a Series 663. If you're in the financial space, you probably have that along with a Series 7 and probably Six Sigma certified if you're trading stocks or you're in investment banking in order to mitigate risk. Now, you don't have to take my advice for it. By all means, use, Google. Go ahead and use Gemini. Use ChatGPT to verify everything that I'm saying, because at the end of the day, if you like this video, go ahead and smash the like button and don't forget to subscribe, because I'm here to help you achieve finding your freedom, whichever means possible. Now, if you are still with me, so on and so forth, after you look up these stocks, I want you to go ahead and ask ChatGPT what would be a strategic way to diversify the total amount of funds that you have saved up amongst these different companies. Let's say it's the top 3 or the top 5 companies and you have $100. So you put an even spread out of $20 into each company out of the 5, and now each company has $20. That's your $100 right there. If we were taking Apple's example from earlier, each one of those companies, if there were 5 individual companies and you knew there was a new Apple product coming out that was going to sell well, right? Well, then if one company goes up, let's say 2-3%, but then the other company goes up another 5%, so on and so forth, and then the trickle on effect, and then of course the main company, Apple, goes up, let's say 8%, you have to total all that up on top of the money that you made, so on and so forth, and you'll average anywhere between about 7 to 8%, and that's being conservative, so on and so forth with the numbers. However, if it does blow up because of some new innovation, you can make roughly 10 to 20% increases on whatever your investment is, if not more. If you're trading options and you're becoming more advanced, well, then you can make a hell of a lot more than just 20%, and anybody in the financial industry can vouch for me on that, right? So let's talk about it, shall we? If Boeing comes out with let's say a militaristic drone plane, right? A militaristic drone plane that does not need to be manned, similar to SpaceX rocket ships, where they don't have to worry about G-forces, so on and so forth, and they're able to travel and conduct operations a lot more effectively. Well, that's going to cost a lot of money, and it's going to take a large investment. And because they don't want to get it wrong, well, they're going to also hire extremely intelligent people to carry this project out. Now, after the project is done and it gets pushed out and it has, it tests positive on all its tests, then purchases will be made, and then the investment will be recouped during the sale of the planes to the military industrial complex, other countries that want similar technology. And then, of course, you as well will get your money paid out on either capital gains or dividends, so on and so forth, or stockholders' equity. right? Depending if you are preferred or common stock shareholder, depending, right? And that is more specific towards people that are very in there if you want a vote or a seat at the table or not, right? So if you're investing in the stock market, remember, if you're not an accredited investor, meaning you don't have $250,000 lying around, or if you're a couple, married couple, you don't have $400,000 lying around, go ahead and trade lower priced stocks between the $5, $10, and $15 price points that have accumulated between 200 and 300% within the last 3 to 5 years. From there, stick to stocks if you are an amateur. If you are an expert, then you want to go ahead and look at the option chain. When you look at the option chain, oh, we got a boat going. When you look at the option chain, you can do covered calls, you can do different types of spreads, you can do puts, so on and so forth, and you can make a great amount of money because essentially with an option contract, you hold a stock and you hold the right to sell that stock at a certain price, and one contract is the equivalent of 100 stocks. So for instance, let's say Apple was trading at $10 per share, right? You would buy an option contract. Well, 10 times, 100, that would be 1,000. So you would purchase that contract for $1,000. Now, Apple stock rises to, let's say, $15, right? Well, you still have the right to sell that bundle of shares at $10. If it goes down, you still have the right to sell those shares at $10, so on and so forth. And you can make money when the stock goes up and when the stock goes down. If you're just trading stocks, you can purchase a stock as a regular stock and it'll function normally, or you can short the stock, meaning you're betting against the stock that it's going to go down. So if you short it, you're saying it's going to go down. If it does go down, you make money. If it goes up, obviously you want to hedge your bets, but that's a more lucrative strategy, but it's also more risky. Now, I would not suggest going straight into options or shorting stocks, so on and so forth. What I would recommend is, well, utilizing the AI platforms in order to do your market research. Make sure that it's within that 3 to 5 year time frame and it does at least 200% or more because, well, you want to mitigate risk. And the way to mitigate risk is by establishing and identifying not only trends, but a pattern of growth over a certain period of time. Any company can do well for a year or two. It becomes more difficult the longer that company is in existence. For those of you who follow Tony Robbins or Jay Abraham, or who is it? Anybody on Shark Tank that does investments and things like that, they will tell you that businesses normally fail after 5 to 10 years. So if they've had growth over a consecutive period of time, you can either invest long or short. Short is less than a year, long would be longer than a year. So again, if you got any value out of this video, go ahead and smash that like button. Don't forget to follow me. And later today, I might be releasing another video going into other ways you can not only utilize ChatGPT to lower costs in your own personal life, but save you a lot of money down the way if you're dealing with attorneys or you are one. So until next time, my friends, take care. Have a great one. This has been another episode of Finding Freedom.